You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music, or lack thereof, if you're listening live, means it is time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. Hope you're having a good trading week. It is another wild one. We have a lot to talk about. I know you missed us on Monday. I was traveling down to the big Futures Industry Association conference here in scenic and sunny Boca Raton, as the locals say, Florida here. A lot of great insights, a lot of interesting stuff to come to the network soon coming out of this conference. So I don't just come down here for the sun, even though it is a nice bonus to be down here and out of Chicago in March, listeners, but a lot coming to the network soon I think might be kind of interesting coming out of this conference, so stay tuned for that. Of course, if you want to check out everything we have cooking on the old pro side, only one place to go, theoptionsinsider.com/pro is the place to go to learn more. If I sound a little bit different this week, it's because I'm coming to you from the southern studio. Yes, I am still down here in the southern reaches doing a few things post-FIA. So we'll be doing the Option Block and TWIFO from down here today, as well as vol views and good old oddities tomorrow. So stay tuned for a lot of fun from the southern studio this week. And speaking of fun, I can't have fun by myself, listeners. We have to welcome on my cohorts, my partners in crime. Let's start off in the hallowed halls of SIBO East. I had a chance, I should say, to chat with a lot of his colleagues this week, and they all had many bad things to say about him. He is none other than the Flowmaster himself, Mr. Henry Schwartz from SIBO East. Mr. Flowmaster, welcome back to the show, sir. Mr. Flowmaster, I believe you have muted yourself. Are you there?
Oh, yeah. You reminded me to mute myself. And then
you have to unmute as well. That's the other part of that equation, sir.
I'll try to remember that. So, no, it's great to be on, and I'm glad you got to catch up with all sorts of exchange bigwigs down in Boca. I've been catching up with Megan Dugan, our head of U.S. options, about the conference. Sounds like it was really interesting. A lot of time for our CEO and president and all of our leaders to really explain what we're up to, some of the exciting things we got in the works, and happy to be here. VIX is over 25 again, but I'm going to try not to be out of my mind.
That's true. We are back. As we're kicking off the show now, we are back north of the danger zone. So it is logins time, listeners. We are in the southern studio, so I don't have the logins at hand. And it is more of a vol views thing, really, anyway, so I think we'll probably save that for vol views. I did cheat last week. I know a lot of our pro members were aching for some logins, and we did dip briefly below 25, but we played it anyway because I'm a nice guy. And who doesn't like a little bit of logins in their lives? So stay tuned for vol views tomorrow, listeners. We'll see if we can get some more logins in our lives. And a man who lives day to day, he draws every breath in the danger zone. He is Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back. How are things in the danger zone known as St. Charles, sir?
Hey, we snack on danger, we dine on death. That's how we roll.
I didn't know Skippy's was called Danger and Death. Interesting. So I wonder if their branding people would be happy with that name out there. But as the team is assembled, listeners, it's another wild one. Let's get right into it. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading out there. Just a reminder, if you're hanging out in the pro from the southern studio, going to be hard to add in the music, so you're going to get the raw, uncut edition on the live this week. But a lot popping off, and again, it's another one of those markets that if you don't like what's going on, just wait a few minutes. It's kind of the opposite of what we saw earlier this week, which was kind of just blood red on the screen for most of the sessions. In fact, I was joking with some of Henry's colleagues this week that one of the days when we were particularly blood red out there, and they were saying, where's the rebound? And I made a joke that they apparently found quite humorous, saying there was all whip that day, no saw. So there was no saw to be found today. We've been doing a little bit of vacillating out there, but we are net back down and getting more firmly in the red as we speak, as we're kicking off the show here. S&P off about 1.25%, listeners, well south of the 55 half level, down around 55 1/4 right now. The NASDAQ off almost 2%, about 1.85%. And the Dow off about 1.1%. And as the Flowmaster alluded to earlier, our old pal Bix Cash, after getting back down into the 24 handle, so pretty much outside of the logins range, is now back north of the 25 handle, 25, pretty much 25.10 to be precise, which pretty much puts it almost unched from where it was on the Thursday show list. I think technically it's down 1/10 of a point, but in the world of VIX, that is pretty much unched for the week. So a lot of Sturm and Drang signifying nothing right now on the old ball front, as we are literally unched from the Thursday show. And our old pal VVIX at a 112. That is down a little bit. That's down about 8 points from where we were on last Thursday's show. Remember, it's been a week now, so a lot to unpack. Let's go around the horn. Let's go the way we started. Let's go out to the hallowed halls of SIBO East. Mr. Flowmaster, it's been a wild week. It seems like the administration kind of doubling down on a lot of their threats on the trade war front, and the market not really liking it as a result. So we're seeing a lot of red and a lot of green on the vol screen. What's been catching your eye this past week and indeed today, sir?
Well, it is exactly what you said. The market doesn't like it. You've started to see the term recession start to show up in more of the coverage. We're down a good chunk. Off those highs, February 19th, NASDAQ's down about 13. Well, NASDAQ's down 13% year to date. S&P's down almost 10%. year to date as well. No, sorry, I'm off a little bit. On the month, that's what we're looking at. S&P's down about 6% year to date, and Nasdaq's down 10% year to date. So these are pretty big moves, and people are a little bit spooked for sure. It's really still related to the tariffs and the trade war, but you have a lot of global macroeconomic stresses happening. So. We've seen a couple very, very large VIX call hedgers come in. We've also seen some people selling some really large SPX put spreads, trying to take advantage of this, this higher vol to have, VIX kind of sticking around in the mid 20 range for several days is really pretty significant. So, it's just a lot of action. The high flyers that a lot of people rode up, more than 100%, some 200 or 300%, have really, really taken a beating. So I ran a spreadsheet just on, kind of some of the biggest movers. You got things like Carvana down 40%, Robinhood down 40%. Reddit down 35%. I mean, these are big moves. This is in 3 weeks also. So, I think that it's kind of a situation like, that we having been in the business for decades, we like this because it really does shake a lot of things out, right? You see some people making bad trades, some people making trades because they have to make trades. And that's always great opportunity if you're kind of able to take the other side. So, I think this is a time to really, step back, say, okay, what is my view? And then what kind of trade really makes the most sense given that view and my risk constraints. So, I've been kind of looking at, puts or put spreads to sell. I think that things are going to stay rocky for maybe the next month or two. I don't expect vol to go back down to 15 anytime soon. However, I also don't think that, the entire market's going to melt. So, that means it's a chance to kind of pick a name or an index that you like and, put some capital to work and then manage it and hopefully make some money off it.
Mr. Flowmaster, in hindsight, I joked about it, but we did all see the signal, and it wasn't 50 Cent coming back. It was the VIX super stupid, Mr. Flowmaster. That was the signal. We joked about it. We said maybe this is a sign that the worm is turning and this new vol regime is moving to the upside. And in hindsight, at least for the last week or two, that has certainly been the case. That VIX super stupid. Looking pretty good. Yes. Looking pretty good out there. At least it certainly was looking better, but it is still looking pretty good at the end of the day. So there you go, Mr. Flowmaster. You need to add a new scan to Trade Alert. It is the VIX super stupid scan. Think you can handle that, sir?
Absolutely. I wrote a little query to track the P&L on that trade because it still appears to be open. It's possible that the buyer's monetizing it in a few other ways. But as of this morning, it looked like they were up about $6 million on a $10 million outlay. So you're right. They kind of, well, it's very, vol was lower this morning. And now that we're down, almost 1%. Falls back higher. So I can't run it live, but I can run it on a next day basis. And that trade really does seem to be working out well. And they didn't pick the very, very low in vol, but their timing was really pretty good.
60%. What's 60% amongst friends, right? That's not a bad couple of weeks worth of work. It hasn't even been a couple of weeks, I don't think. Maybe it's been exactly 2 weeks now. But yeah, it's a interesting one. So we did only have jokingly on the show listeners say maybe that's a trade you might want to sit up and pay some attention to. And in hindsight, that has certainly been the case. But we always sit up and pay attention to the man who lives in the danger zone, none other than the uncleist of Mikes, Mr. Uncle Mike Tosaw. Mr. Uncle Mike, sir, it's been it's been a rough week. You and the Facebook cabal not living up to your duties out there, keeping us in the green. What's going on, sir?
Well, I've always said I'm long-term bullish, short-term cautious. And I think it's important to be short-term cautious, especially when this past short-term has been a 10% pullback in the S&P 500. We are roughly 10% off the all-time highs on the S&P 500 right now. And so I guess that technically means we are in a correction. I think, was it 20% down from all-time highs? That means we're in a bear market. But either way, it is what it is. When you have markets that go up 20+% 2 years in a row, you're going to get pullbacks. And combine that with the uncertainty of tariffs and just uncertainty in general from the global macro level, it's going to happen at times. I'm a firm believer that you need some part of your money in long-term buy and hold stocks. You need some of your money in the boring stuff and bonds, but you also need some of your money in hedged equity in some way, shape, or form. And that's looking pretty good today in my portfolio. I have a variety of portfolios that we are hedged with put options, and we're probably the next week or so, we will be looking to make some moves in those, just depending on how things shake out. Right now, in my put rolling mode, I'm in what I refer to as not today mode, meaning am I going to roll these puts in some way, shape, or form and take action on some of them? And some of them, for the 1 year ones, I'm not going to take action on. I'm thinking for more of the short term ones. Am I going to roll them, do this, do that, or do whatever? Yes, but not today. When the market just continues to go straight down like it has, I just go to not today mode. And that's kind of the mode with which I'm in at this stage. We are getting a rally in silver, just looking at SLV. That's 30.65 today, up 1.5% on the day. So the shiny stuff is doing well. We are getting some buyers in the bond space. Just looking at IEF, up about 0.25% today. And it's. I think that's good because things are normalizing, and that when markets go down, bonds are not going down at the same time. The other thing that I think is we need to keep an eye on. I don't think the Fed's going to do anything next week at their meeting, but as the months go on, at some stage we might get some lower interest rates. Maybe, kind of, sort of. Who knows? And I think one of the stimulants for what could really help our economy would be if we had lower interest rates. Now, of course, you have to walk the fine line of interest rates along with inflation. And so we would need inflation to come down, and then possibly we could lower some interest rates, and then people could borrow again more easily. But I'm not sure if that's going to happen anytime soon. But the other thing to keep in mind, like I said, is that bonds are not getting sold off at the same time as stocks. So on a positive note, which we probably need right now for all the bulls out there, that's something that we could look at as a positive. And that's what I'm seeing today. Oh, yeah, Bitcoin's down.
There you go. Everything else in your portfolio could be red, sir. And as long as the old BTC was down, you would still have a smile on your face. You are that vindictive at the end. This is a side of Uncle Mike other people don't see, but I see. I know behind the scenes, sir.
Hey, yeah.
He finally admits to it, listeners. Years of denial. And I finally get him to admit, live listeners. So cut that out. Make the clips. You have the truth right in front of you now, listeners. Right in your ear holes, as the kids say. Let's see what the kids are saying about the volume lighting it up out there. Is it a hot day? Is it indeed a spicy week? And you know what? I just go south for a few days, and everything goes to hell in a handbasket, and all the volume goes to yet another level. I'm hard-pressed to think of the last time, maybe the Flowmaster knows, hard-pressed to think of the last time SPY was averaging over 10 million contracts a day. That's exactly what it's doing right now, listeners, 10.1 million. The S closing in on 4 million contracts a day, 3.76 million. These are wild times, and not to be outdone, VIX averaging north of 1 million, 1.09 million. We saw some of that towards the tail end of last year around the election time where things were kind of wild, but outside of those very rare periods, it's usually short-lived. VIX has a hard time maintaining north of 1 million contracts a day. We'll see if it can maintain it today. Is it threatening it today, listeners? The answer is yeah. It's closing in on 700,000 contracts already. 697,000 contracts to be precise. So that's a spicy meatball. What's the big dog out there today, listeners? We've got a lot of upside lighting up the tape. In particular, 35,000 of the June 70s. Those are straight openings. So somebody coming for a little bit of an opening party on the June 70s. I'll have to look and see if I can find a price for those. Usually, when we see that funky upside, it's against something else. I don't see this going up as a spread, though. I do see the June 37s trading 29,000 times, so there could be some vertical action. If that's the case, you like that, listeners? 37.70. Some funky strikes there, but we've seen weirder things. Number 2, 32,000 of the April 30s as well. Number 4, 27,000 of the May 50s. and 25,000 for number 5 of the March 30. So we're kind of all over the place, but June 70s, listeners, those are funky. I'm looking right now. They went up for 38 cents this morning. Now, that might be a fun little. And they went up at the same time as the June 37. So if it looks like a duck and it quacks like a duck, listeners, it probably is a duck. But then they went up the same exact size too, 28,687. So it was a June 37.70 vertical. Again, funky strikes out there, listeners. But that's what we got lighting it up in VIX. SPY also on the rampage. 7.05 million contracts on the tape right now, listeners. The ADV 10.1 million contracts out there. So SPY, when's the last time SPY was over 7 million? It's at least by this time of the show. It's been quite some time. The S saying, hold my beer. I want to play too. 2.2, almost 2.25 million contracts on the tape. The ADV 3.76 million. So the S looking pretty spicy as well. Small caps by comparison looking hefty, but not quite as knock your socks off as the rest. 867. There have been quite a few times we've seen small caps this active, if not more. We've seen them at 1 million contracts by this time in the show many times. So comparatively impressive, but not knock your socks off. The ADV 1.63 million. And the Qs 3.14 million. The ADV 4.91 million contracts. All right. To the land of single names. And is it a banger single name day? Sometimes when we get all this macro action, some of this whipsaw, or maybe in the case of today, mostly down action, sometimes it's the land that time forgot in the single names. Is that the case today? The answer is kinda. 650 would be impressive. 250,000 contracts on the tape right now, listeners. That gets you to our old pal Neo. I haven't seen Neo in the top 10 in a while, so you know things are interesting when Neo's making into the top 10. Exactly 250,000 contracts, 467 right now, off about 43 cents, or about 8.5%. So not a good day for Chinese EVs, Liz. I got a feeling it's not the last EV name we're going to see on our top 10 today either. You can probably guess what the other one's going to be. Number 9, we got AMD, 264, $98 even. Off about $2.75, or about 2.75% right now. So a rough day for AMD. They are back below the par strike. Let's see, year to date, that now puts them off 23 handles, or 19%. So all this chip love, listeners, going the way of the dodo, at least so far this year. Number 8, the Monster. Is the Monster looking less monstrous? The answer is yes. 280,000 contracts on the tape right now for number 8. 258.90 is where it's trading. Actually, just ticked 258.68 now. Selling off more, off about $3.90, or about 1.5%. So a rough day for the Monster, and a rough year, off about 41 handles, or about almost 14%, 13.75%. So no love for the Monster out there today. Number 8. Number 7, it's Meta, 590, off a whopping 28 handles and 85 cents. So yeah, they're coming for Meta today. That's about 4 2/3%. Let's do the same little test, listeners. And obviously, Meta not having as rough of a year as some of the others. It's off about 9 handles, or about 1.5%. So obviously, today's move taking it into the red for the year. Number 7, Meta, 307,000 contracts on the tape. Number 6, Palantir, man. This has been a wild ride in Palantir, and it continues today. If you were saying to yourself very recently, oh man, I wanted to scoop some Palantir, but I missed it when it was in the low 80s before it rallied back up to 90 and above, guess what? It's a good day for you. You're getting your second chance here at a much lower price, $78.69, almost exactly $5 to the downside, nearly 6% today. So another wild run for Palantir. They are number 6 right now, $371. Even at that level, listeners, they are still up about $3.50, or about 4.5% on the year. So even with all this madness, Palantir still up on the year. But if they have another day like this, not going to be happening for long. Number 5, the Amazonians, 390,000 contracts on the tape. 192.25, off about 6.75 today, or about almost 3.5%. Good for number 5 out there. Again, we're already at number 5, listeners, and only at 390,000. So not the most action-packed day. But then we go to number 4, and we take that next leap up. It's the fruit company. 850,000 contracts. So you're talking almost 500,000 contracts difference between 5 and 4. It's just one of those weird days, listeners. Apple, 210.75, off 6.25, or nearly 3%, about 2.9%. So You know, it's an interesting day when they can even take Apple down a little bit. Apple's down about $24.50 or almost 10.5% just in the past 5 sessions. So they are finally starting to show some red in Apple. That puts it off 33 handles or about 13.5% year to date. So an interesting run for the fruit company. Obviously, they're still well north of that level. I think they were around 175 when they were announced they were buying all the stock back, maybe a little lower. So they're obviously still well north of that level, but given up quite a bit so far this year. Coming in at number 4, 847. Number 3, yes, it's our old pal Intel. They're up, they're down, they're getting bought, no one's buying them. all kinds of madness going on in the world of Intel. 23 3/4, up about almost $3 just today, or nearly 14%. On the year, that puts them up about 3 1/3 or 16.5%. So it's been a wild year here for Intel. Number 3 today, 1.35 million. So stuff popping off in good old INTC. 2 and 1, you could probably guess. Can you guess the order, though? Number 2, it is Tesla, 1.94 million contracts on the tape. 236 1/4, off about, actually just ticked another half a buck, 235.78. Off about 12.31 or almost exactly 5%. So they didn't have a lot of upside to give, and they're giving more back. This name has obviously come under, I think, to put it mildly, duress since the start of the year. They're off of almost 150 handles, or nearly 40% since the start of the year. Of course, if you get to their apex of around 428, they're off almost 200 handles at this point. So not quite cut in half, but pretty darn close out there for Tesla. So if you're a Tesla bull, hasn't been the best run. And then number 1, only slightly above Tesla right now in terms of volume. It's NVIDIA, a little north of 2 1/4, about 2.3 million contracts. About a tick shy of 115, 114.98 right now, off about 76 cents. So this is another one, if you were saying, man, I missed it at 116, I would have loved to have picked some up there. Well, there you go. 115 is your Huckleberry. Good for number 1 today, 2.28 million contracts on the tape, listeners. In terms of earnings, it was still another week, I should say, with some action out there. Big names popping off this week. Oracle, I was talking to some Oracle folks down at the conference. All of a sudden, all these cloud firms are hanging out at financial conferences, listeners. That's just the world we live in. Microsoft, Google, Oracle, all hanging out down at the big Futures Industry Association conference. That was never the case just a few years ago. Tuesday, we had Kohl's and Dick's Sporting Goods. Wednesday, Adobe. Thursday, Uncle Mike's fashion outlet known as Dollar General, as well as Ulta Beauty. And then, still some names popping off for you this week. And if you like a little earnings action, we got some for you. Stay tuned to the website for the latest updated report with the full week's worth of data out there, listeners. Meanwhile, it's time for us, speaking of data, it's time to unleash the beast that is the Flowmaster. He's been sitting on his hands for a week, champing at the bit to talk to you folks. Let's do that now. A little bit of the old Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, and the Flowmaster gets, as the kids say, off the chain. He goes crazy, listeners, with a lot of fun stuff. Looks like he's feeling the love to kick things off today. I know a lot of people are not. Love, of course, Southwest Airlines. If you know anything about Southwest, listeners, one of their main selling points, their main marketing has always been you get 2 bags to go with you. Apparently, they're putting the kibosh to that now. I guess they're responding to some activist investors who've been agitating over there. So that's going the way of the dodo. And I'm not sure how long-term Southwest fans are going to feel about that. Probably not great. Seems like the street is not minding it, though. The stock today up about 35 cents, trading at 30.44, puts it up a little over 1, about 1.1%. In terms of good old Love, let's see, what's Love been up to for the past year? We haven't really talked about Love in a while. A year ago, it was 28 1/4, so a net on the year, it's up a little over $2, about 2.20 or almost 8%. So they've managed to squeak out a decent year. They took their hiding like everybody else back in August 5th They hit their low for the year last year. Looks like around 23 3/4 in that range. Then they rallied hard. They got up to, on December 4th, looks like around 34.15 or so before kind of shedding most of that and hit their recent nadir down around $28 before bouncing apparently off this news that bags no longer fly free. Mr. Flowmaster, what are your thoughts on free bags going the way of the dodo, and what did you spot out there in love, sir?
Well, I'm not personally a fan of flying Southwest. I know I've done it in the past, and weren't they merging with Spirit, or did that happen?
That was going to happen. I think they kiboshed. It was JetBlue and Spirit, I believe.
Gotcha. Well, these super discount airlines with no frills, they do have a place. And maybe the thought is if we do go into a deep recession and the dark days are upon us, then the discount airlines are going to do better. But what jumped out at me today were a couple of trades in rapid fire. It was basically just after almost 12:30, just before 12:30 New York time, a buyer paid 72 cents for about 3,700 of the April 32.5 calls. That's when the stock was trading 30.63. And then a few seconds later, they bought another 7,500, paid 75 cents on that. And that one was actually done as an auction trade, which means the trade was paired up. And they threw it into the market to see if they could get any improvement. It doesn't look to me like they did get any improvement. But so a total of 10,000 of the April 32 half calls bought to open. Currently that puts the call volume about 3 times normal, and the put volume is also 3 times normal. Volatility is kind of flat, down a little bit actually, but the put call skew is tilted up a little bit more towards the calls. So it's still normally configured. You still have puts at a higher vol than the out of the money calls, but it has kind of flattened up to reflect this upside bid. So that's given that the tape is really overwhelmingly bearish, this does kind of stand out as somebody saying that they are willing to take a bullish shot. So that was my biggest one today.
I guess this person clearly a fan of no more bags. That they wanted that, and they're buying the upside. And so far, at least, that seems like that's working out. Looks like our chat, Mr. Flowmaster, is not a fan of that that change. I guess you're right, because they do have that kind of funky boarding Southwest. They call it the cattle call, whatever. I think people put up with that because they get all their bags to go with them. Now, of course, if you're taking that away, I wonder if people will be, let's say, a little less excited about putting up with that kind of fun. So interesting stuff. Whenever companies do away with one of their distinguishing factors, you always kind of have to wonder what the future holds for them. Speaking of distinguishing factors and what the future holds for them, here's a name that didn't seem like it has much of a future. And they had one distinguishing factor. I'm not sure how distinguishing it is anymore. Talking about Xerox. Remember them, listeners? I haven't talked about them in ages on the network. Ticker symbol XRX. Trading $5.88, off about 18 cents, or nearly 3% today. So still north of $6 here for a good old Xerox, which may surprise some folks. It may not surprise you to learn that it's been a rough year yet again. When's the last time Xerox had a good year? But a rough year for Xerox, off 65%, so pretty much 2/3. A year ago, they were trading, looks like right around almost $17, $16.85. They did drift almost to 18, about 17 3/4 in April, before pretty much giving all that back throughout the rest of the year. So, yeah, if you were one of the ones bidding up Xerox a little less than a year ago, it's been a rough year. But nonetheless, Mr. Flowmaster, hope springs eternal. Somebody popping up this morning and saying, you know what, Xerox, I like the cut of their jib. I think these spunky young kids have a future in this here copying thing. I'm going to say April 7th, they said, how are they? They got a nickel at 15 cents, which the stock was $5.89. By the way, that is a 52-week low that they're hanging out right now. So they could be trying to do a little bit of just bottom fishing on the chart here as well. They said, you know what, April 7th, I will pay 15 cents. 5,000 times exactly. Worth noting, there are earnings on April 29th. So that's going to fall pretty much right outside. Yeah, earnings, or I should say expiration in April's on the 18th. So the 29th, not going to get there, listeners. So if you're thinking you're going to get a free swing at the bat for earnings, not the case. You got to go into May. I'll have to go see if I'm guessing there probably aren't weeklies in Xerox. So you probably have to go to May. So yeah, April 7th, 15 cents. Mr. Flowmaster, you down with a little bit of swinging for the upside in Xerox, sir?
Yeah, I'm looking at that trade. I mean, I actually think they got a pretty decent price. It was a nickel 15, but our Theo modeling shows it worth about 14 cents. Now there's still a nickel 15, so I guess there's more where those came from. I don't know, it might be long a little bit of Xerox from probably some higher price level. Yeah, I am. I'm long. I am long a little bit from $22. Not sure when I bought that, but that's not a great one. Maybe somebody's looking at it as it's just beaten down. Still a household name, at least in the U.S. So, maybe they're looking for something to happen. I mean, 7's not that far out, considering where it was. So, I don't hate it. I mean, I think that. I think given the way the market's been moving, kind of picking your spots and getting long some optionality is certainly the more comfortable position. I mean, they paid about 70 vol for this trade, so it's gonna melt on them if the thing doesn't start to move. But they have, they do have about 6 weeks, 35 days until that expiration. So I don't hate it.
Yeah, that's literally exactly what I was just thinking to say. I was like, I don't hate this one either. It doesn't, of all the trades we profiled, this offends me a lot less than many others. You're buying a little bit of duration. It's not an offensive price. All things considered, if you think this just maybe technically you think it's going to bounce off this 52-week low, then maybe it's not the worst trade. It's got to rally back up to $7. That could be a heavy lift for a stock that's known nothing but red for the better part of the last year, but if you're inclined to do a little bottom fishing, I've seen far worse than this. Let's see if this next one can be charitably described as I don't hate it or not. This is New Fortress Energy Inc., ticker symbol NFE. We have talked about this name. This name sounds familiar, but it's been quite some time out here. They're trading $8.30 today, off about $0.50 or nearly 6%, about 5.6%. So a rough day for NFE. Also, a pretty rough year. They're off $8. So I just said they're trading around $8.30. So yeah, they're off nearly 50% on the year, listeners. That's pretty rough, and it's been pretty much straight down. I don't see a lot of respite on this chart pretty much at all for the better part of the past year. So it's been a rough year for New Fortress Energy, which made this print we saw kind of stand out to us. Somebody came in this morning when the stock was actually lower, 784. So if the Rock Lobster was here, he would say that they've passed the first sniff test. The stock has rallied since then. They came in and said, April 10s, how are they? They got a pretty tight market. They got 35 cents at 40, which kind of makes me wonder if maybe something was lurking in the book or there was an order somewhere to tighten that market up, because a nickel wide on the April 10s, and okay, maybe it's just a really liquid name. Probably not. NFE April 10s, they said, I'll pay 40 cents, good sir. 2,592 times. That was the 52-week low for the stock at the time. It has obviously rallied around 40 cents since then, so a decent scoop, all things considered, that the stock continues this momentum. Now, these are the 10s, so they got a ways to go before they threaten that strike. So from that perspective, it's still a bit to pay. And if you're wondering, you're like, why would anybody pay for upside in this name? Somebody else might have been feeling what you were putting down there, listeners, because right about a half an hour before that call trade that we noticed that our Eye of Sauron picked out today, we did notice also a big print going up this morning, entirely in the other direction, which, looking at this chart, it might make more sense to you. Somebody came in at around the same time and said, hey, these 5 puts, how are they? They got 85 cents at $1. They said, you know what? This chart is a piece of crap. I will pay $1 10,000 times so that was not exactly a small trade. That was also right around the time at the 52-week low of $7.75. Obviously, through December, they're getting a whole year's worth of protection/hedging. The downside, of course, they're only stopping themselves out at the 4 strike, so stock's going to be cut in half again before your puts really kick in. So that's an interesting one. If someone's willing to pay that much for these puts, then perhaps a rough one. But we got Mr. Flowmaster. It's always interesting when we have a tale of 2 tapes, a tale of 2 trades that appear on the surface to be diametrically opposed and going up within about a half an hour of each other, sir. What are your thoughts?
I'm looking at that. That is an interesting one, and you got the trade exactly right. I see a broker show from the Amex confirming it was a buck buyer 10,000 times. Looks like somebody paid $1.10 for another 4,000 later, after we started the show 20 minutes ago. Interesting. I mean, it does kind of seem like the Bears are taking a bigger position than the Bulls on this one. I don't know the name. Again, it's one of these really beaten up stocks. And I just kind of get the feeling like, I mean, it's getting kind of bleak. I mean, where futures are at their lows. This is kind of, I think people are getting a little exhausted. I know when I start to get texts from my brother and my father saying, hey, should I sell everything that I have, that people are really starting to stress out. I tell them no. I said, just kind of sit for a bit. And we kind of all know what the best strategy is, unless you're really over leveraged to begin with. But, I think this is somebody, it looks to me like somebody just kind of, on the bull side, somebody looking at something really beaten up, and on the put buyer side, somebody with a very different opinion. Maybe they missed the chance to sell the call, so all they could do was come buy the puts.
I missed the calls. I got to buy 10,000 puts now. It's the only other possible alternative that I have. By the way, Mr. Flowmaster, when people come to you with those questions, they say, should I sell? The answer is always resounding yes, because then they just keep crushing the market cheaper for the rest of us, right? So by all means, next time they ask you that question, tell them just liquidate it all. Speaking of you folks reaching out, listeners, it is time to do just that. It is time to head on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Along those lines, we had a couple interesting questions of the week last week and this week that are kind of interesting, maybe a little bit surprising. I'll give you some insight into what you folks are thinking. We asked you last week, right as all this tariff stuff was really starting to kick off in the marketplace, we were really starting to see a lot more red on the screen than green. We asked you folks, hey, we're seeing a little spice in the market right now. Do you think this has legs, or is it just a dust-up? Quite simply, breaking it all down to brass tacks, where do you think VIX is going to close at the end of March? A little spicy, so north of 20, or a little bit more mild, below 20, or it's all too spicy for you, you're heading to cash. And at the end of the day, slightly over half of you, 53.8%, said it's going to be a little bit mild. It's going to be below 20. Seemed like you were heading in the right direction today. Then, of course, the worm turned as it is wont to do, and we are once again heading north. But, of course, a long time until the end of March, and anything could happen. Spicy, so north of 20, 41%. And too spicy, I'm getting the hell out of Dodge. I'm going to cash, 5.1%. I'm guessing that 5.1%, Uncle Mike, they don't have you as a financial advisor, so they're getting the hell out of Dodge. Uncle Mike, are you surprised that slightly over half of our audience, about 54%, says VIX is going to be below 20 at the end of the month, sir?
I actually am a little bit surprised with that. So we actually have some VIX bears out there, and that does surprise me. And I am in that camp, but I would have guessed that we would not have had that many.
One of our pro members, Mr. Age Del Aquarius. I don't see him in the chat today. He must not have a snow day, so he can get off and listen live. But he's never been a shy with the GIF, and he cheated out of fun. Just GIF of the Spice Girls. Because who doesn't like a nice GIF of the Spice Girls when you're talking about the markets being spicy? Mr. Flowmaster, who is your favorite Spice Girl if you had to pick one? I see you more as maybe a scary Spice guy, but hey, to each their own. And then B, are you surprised that almost over half of our audience, I should say, are thinking VIX going to be below 20, sir?
Well, I think that, I think VIX being below 20, that is kind of what we're all used to. But at the same time, we also kind of all know that, when VIX really starts to go up, rather than being one of the early sellers, you actually want to kind of buy it on its way up. I know Mark Sebastian's also a big fan of that. So it doesn't surprise me that everybody's kind of like, yeah, we all know eventually VIX probably will end up back in below 20. The question is always, was it going to take a week or a month or 3 months, and we've seen all of those scenarios. And I was just talking to a reporter yesterday, and one thing that's very different about the kind of the volatility jumps we've seen in the last week or two is it really is hitting the 90-day and even the 180-day vols harder than I've ever seen in kind of a big jump. So it's one thing if VIX spikes, right? That's your 30-day view. When we see VIX go from 20 to 30 in a day, if we have a 4, 5, 6% down day, that's normal. But trying to look at what are the longer dated vols telling us, there's information there. So we do have VIX. SIBO does have a VIX 90D and a VIX 180D. Really just kind of watching the behavior though. So. And in terms of the Spice Girls, I think I'd probably go with Ginger Spice.
Oh, Ginger. There you go. Didn't you become like a member of parliament or something? By the way, our chat's down for a little Scary Spice, apparently. So they like themselves a little Scary Spice. Speaking of our chat, Nichols, I see you talking about volume numbers in 0 DTE drying up on crazy days. Yeah, that was the case, especially on August 5th, 0-day volume, went to die. I mentioned this before. It seems like since then we've had a few more shocks to the system. It's not drying up as much anymore. In fact, I was talking to some people about that this week down at the conference, how 0 DTE volume is starting to be a little bit more resilient in the face of these massive body blows and whipsaws we're seeing day after day and week after week. Mr. Flowmaster, you're always crunching the numbers. Are you seeing that as well? 0 DTE percentage is remaining firmer in the face of these shocks to the system, sir?
Yeah, absolutely. In fact, I just sent some data out yesterday to a client. Year to date, the average daily volume in the 0-day in SPX is close to 55%. And even on these big days, we're not seeing it drop off the same way. Although if you break it into the customer, market maker, and firm, I still see a lot of market maker growth. So it's possible some of the customers really are sitting it out, and market makers are kind of picking up the slack, because in that 0-day world, you have a lot more incidences of market makers basically slamming into each other on purpose or potentially inadvertently. But that August 5th situation was that was a weekend move, right? That everybody was watching Sunday night and into Monday, and a lot of those traders said, I'm not going to dip my toes. I think I actually know, I pay attention to some of the forums of these 0DT Condor sellers, and they're continuing to trade through this. And in fact, even on a day like today, I don't have the trade on, but when the market kind of trends one way, they actually do fine, right? Because remember, the strategy generally is selling a condor, but also setting a stop at 2 times the premium collected on one side. And so meaning if you collect $1.50 on a call spread and a put spread, and the market sells off, as soon as your put spread hits $3, they tend to close it out, meaning they collected $3 at the beginning of the day, they've exited for $3, and the goal is on a move like that, they're flat. Now there's risk there, and I think we all know how stops work, and there's potential for a real sharp move, and your intention is to stop yourself out at $3, and the reality might be there's no, the markets are super duper wide, and you may end up paying a lot more than that. So, but we continue to see very, very strong 0-day volume. The 0-day volume this month is running 2 million contracts a day in SPX alone. So, it's still a phenomenal amount of activity.
How did I know you would have up to the minute data on that? So they don't call you the Flowmaster for nothing. I shouldn't say I don't call you the Flowmaster for nothing, but c'est la vie. I am the dispenser of nicknames. I have now rechristened your office SIBO East, so there you go. Enjoy that, sir. I want to get to our other question of the week right now, but I want to get to this one as well, because he sent it in a little while ago. One of our longtime listeners, Mr. BZ Tokyo, one of our international listeners as well. He says, I sent it in for the option block. Well, you passed the first test. You sent it to the right show. He's got a bit of a long one here. He says, I've been reading headlines of the past few weeks about the ton of lawsuits against Sherry Redstone and her underhanded Skydance deal, being sued from all sorts of funds, pension plans, etc., and noticed a huge volume on February 12th and 13th For the March expiring on the 14th, so tomorrow, listeners, 11 calls, and the March expiring on the 21st, also 11 calls. He says, and for regular plebeians without specialized data feeds, I was wondering if these are straight out buys or sells against stock, i.e. covered calls. I then started wondering if the volume suggested somebody knows something since earnings were on February 27th. So I picked up both for around 30 to 40 cents, and I sold half at 60 to 70 cents. Oh, it sounds like a good trade, Mr. BZ. Then sold the rest after earnings at break even. But how can us plebeians, you're listening to this show, you're not a plebeian, Mr. BZ Tokyo. How can us plebeians get a feel of what kind of volume there is without paying for data feeds? Thanks as always, and looks like you might need to bring back the Danger Zone song soon. You can always sing it as a cover with the Rock Lobster to avoid copyright issues. Well, hopefully you enjoyed Vol Views last week, Mr. Tokyo, because we did bring back the logins. Copyright issues be damned. Sometimes you just got to fly into that danger zone. And last week was one of those days, and tomorrow, as it's shaping up right now, looks like it might be one of those days. I'll have to go dig Mr. Flowmaster. I'm not sure. Is this a name you watch very often, Skydance? Did you notice these blocks of the 11 calls expiring tomorrow and on the 21st? If those came across your radar, by all means, let us know. And then B, what are your thoughts on people, like he says, he actively trades. He's not sure he can swing a crazy data service. You know, what can folks like him do to kind of stay abreast of moves like this, sir?
Well, I mean, it sounds like he did pretty well on the trade.
Yeah, so, he did all right.
I mean, I also don't love to pay for things, but when you're talking about the options world where you've got literally 1.6 or 7 million options out there, and you're trying to make sense of it all. You might not want to pay for it, but you got to realize anybody trying to handle that data has got to have a pretty good expense just to deal with it all and serve it up the way that you want it. So I would encourage them to think about what what their return is on the data. I think sometimes in some of the lower end brokerage platforms give you delayed quotes and charge you a couple dollars if you want real time data, and some people actually just keep the delayed quotes, and we all know that it's absolutely ridiculous to think you can do anything looking at delayed prices. So it's worth paying for. I haven't watched super closely on the Paramount Skydance situation. I know some really great kind of special situation traders who really do dig into the nitty gritty and the timing and kind of every possible direction that things could go. Similarly to like when we see biotech trades, right? Like, there are people that pay very close attention to the drug trials and even have, like doctors on staff to review the studies and kind of know what makes, what's significant. So, in special situations, I think that the option data has even more value than in something that's just super duper liquid, where you're going to see people getting in and out because they don't really have to endure a massive kind of amount of slippage. So I think it's an awesome thing to pay attention to, and invest in tools. There's no reason to kind of reinvent the wheel. I mean, Mark, that when we were market makers, we killed ourselves to come up with technology that would just give us a basic picture of things. And nowadays that technology is out there. It's really robust, and it's, in some cases it's very cheap. It's generally not free, but it's really, there's an amazing selection of tools that people can get a hold of.
Yeah, I'm looking here. It looks like Paramount topped out around $12.14 last week. So those 11 calls obviously are looking pretty good. So BZ, you had a good tip. You got rid of half of them. That's a good way to go. And you let the rest ride and you closed them out at break even. Sounds like a decent trade overall. We have talked a little bit about Paramount, I believe, on our oddities program. Maybe we'll dig into it a little bit more there. But I'm glad to hear things are going well. And there's a lot of platforms out there now that offer you different nibbles. A lot of the brokerage platforms will offer you stuff to get you started, to start analyzing a lot of this flow we talk about. And then maybe when you hit that next tier, that next level where you're ready to pull a trigger, then you too can dance with the Eye of Sauron. Speaking of dancing, our chat is all over the Spice Girls now. We had a lot of early stuff about Scary. Then now we got votes coming in, Mr. Flowmaster, for Posh. I forgot about Posh, yeah. And now we got Baby. It's like Baby is taking it over. So Baby Spice running away with it. So there you go, Mr. Uncle Mike. the question turns to you now, sir. First off, who is your favorite Spice Girl? We got votes all over the place for all of them. And then B, our actual question of the week right now, sir, is a lot of people have been saying lately, this BTFD, this buy the freaking dip, to do the family-friendly version, is dead. So we thought we would ask you folks, do you agree? Yes, it is dead, or no, I'm out there buying more right now, or I'm out, I'm in cash. Mr. Uncle Mike, favorite Spice Girl, and is BTFD dead?
Well, I have to tell you what I want. What I really, really want would be to say, I couldn't tell you which one is which, but I did actually remember Posh Spice when you were bringing them up. But I don't know. I couldn't tell you which one. So I'll go with Posh.
There you go. You remember Posh? It's got to be her then. Only one you remember.
That's right. And then in terms of buying the dip, I mean, time will tell. If we actually buy the dip, but I do not think buy the dip is dead. Buy the dip has been alive and well for the entire history of the stock market. 100% of the time, in 100 years, whenever there's been a dip, it has been bought until now. So we might be able to change history. Who knows? But if history tells us anything, the dip will be bought.
Mr. Flowmaster, we already have your vote for Ginger Spice, but what do you think in terms of is BTFD dead? And B, what do you think our audience is up to?
Well, I have had some chats with friends of mine about, it's changed from buy the dip to sell the rip. At least for the last few weeks, that really has been the case. I think that, it really depends on what your time horizon is. Markets do go up over time. I think that we're in a very uncertain moment. There's a lot of bad stuff on the tape. The market's also had this incredible run over the last few years. So, I don't think a 10%, even a 15% kind of pullback is the end of the world. It can feel like it when if you've just put all your money into the market, 2 days ago. That's very painful, and that's why some asset managers kind of say, look, why don't basically average in at least over a little bit of a period of time, just so you don't have terrible luck. But I think that you have to have a long-term view if you're an investor, and if you're a trader, you have to keep your trades small. And buying the dip is fine, but you got to have a plan, right? What happens if the dip turns into another 2% sell-off? You got to be careful not to really put yourself into a corner.
Right now, our audience, they can't make up their mind on this. It was actually almost exactly evenly split heading into the start of the show. It has tilted a little bit now towards the dark side of no. No, I'm buying more right now is winning with 44.4%. Right behind it, though, yes, BTFD is dead, 37.8%. And I'm out in cash, nearly 18%, 17.8%. You're saying, you know what? This is too spicy of a meatball for me. I'm out. So get your voice in there, listeners. Make your voice heard now before the end of the week. As we keep on going into the end of the show, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listen, I think we need a fun flash poll to determine who truly is the greatest of the Spice Girls. I think our producers are working on that as we speak. I'll see if I can have some hard data for you right before the end of the show, because I know the Flowmaster loves to crunch some data. All right, Mr. Flowmaster, we're heading into what looks like to be another spicy end of the week and another spicy weekend. What are you keeping an eye on until your next appearance next Thursday? Macro matters, and that's what I think most people are paying attention to. I don't think we have earnings in anything too exciting. I think really VIX is at almost 16, or it's almost 26 right now. That really was kind of it's been the high recently. We did get almost at 28 briefly on Monday, but VIX is really ramped up. I told you we had a couple. The super stupid, which was exactly 2 weeks ago today, and as of last night, the P&L was up around $7 million. So as of today, I bet you they're closer to $10 million. That's we're watching to see if that trade is adjusted. I don't really think anybody put that on thinking VIX is going to go to 80. I think they probably put it on thinking they could double or triple their
triple their money. And as some of the smartest people say, hedges are great, but you also got to really take advantage of monetizing them, taking them off, and putting the money back to work, putting the money back into the market. And that's probably one of the hardest things to do, because if the market crashes, most people are feeling pain. They've lost money. And even if you have, a little lump of cash because of a hedge, it's kind of hard to pour that right back into the market. And on the hedge fund side, it's really hard because they tend to get redemptions, so they're losing assets just because the market's gone down. So, I'll be watching macro effects. I'll be watching volatility, and just kind of trying to find some opportunities.
I like it. Mr. Flowmaster, can anyone access that super cool, super stupid data, or is that a Flowmaster special for you only over there in Trade Alert?
So you can do it if you have Trade Alert. Basically, you can kind of follow those instruments. So that it's hard to package it into a basket of options. We don't do that. So I would say, you do have access to time and sales to do it. But if anybody emails me, hschwartz@cbo.com, I'd be happy to set them up to see how that trade is doing.
I consider me emailing you right now. This is my official email. Send me a screenshot of that. I want to see the performance of the super stupid. We need a super stupid tracker, the way we used to have the Tesla catastrophe puts. I had a feeling that might be a bit of a bellwether, and it is turning out to be so. I'm glad to see you thought so as well, creating some fun stuff behind the scenes. Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on for until the Monday show? And then B, since we're coming towards the end of it, where should folks go if they want more Uncle Mike goodness in their lives?
Well, a couple things. I'm continuing to watch bonds, and then right now we are about 10% off the all-time high in the S&P, watching to see if this is acting as somewhat of a level of support, so continuing to keep an eye on that, as well as anything macro. We're in very much a macro news market these days with the tariffs, with Ukraine, everything going on. And if you'd like to set an appointment to talk to me about what I do in these types of markets for clients, check out my website, stcharleswealth.com, and book a phone call with me. Always happy to talk to any of our listeners.
And Mr. Flowmaster, same question for you, sir. Where should folks go if they want to track super stupids or anything else over there in the land of the flow?
cbo.com/RMA is where we have our data and platforms and offerings. And as I said, just reach out. Add me on LinkedIn or hschwartz@cbo.com, and I'm happy to show people some magic.
Speaking of showing them the magic, our producers are quick on the trigger finger as we're winding up the show here, listeners. We have a flash poll live right now. By the way, our chat reminded me about Sporty Spice. I had forgotten about her as well. So all kinds of Spice Girls coming out of the woodwork today. Our poll is, do you prefer Baby Spice, Posh Spice, Scary Spice, or because there's only 4 slots, listeners, they had to combine Ginger, Mr. Flowmaster's favorite, and Sporty. And right now, our audience evenly split between Baby and Spice. No love for Scary, Ginger, or Sporty. Get over there at Options and make your voice heard, listeners, for the pressing issues of the day. Speaking of the issues of the day, if you're hanging out in the live, I will be back post-haste right away with a little bit of This Week in Futures options from the Southern Studio. So look forward to that. Should be a fun time. Then back again tomorrow, of course, also from the Southern Studio, noon Central, 1 p.m. Eastern, to talk all of this madness in vol. Will we talk super stupids? Who knows? Got to tune into the show to find out. And then after that, one final time for the week, exclusively for all you cool kids out there in the Pro, we'll be coming back for some options oddities. If you want to check out the Pro for yourselves and debate Spice Girls and all the other fun we have, only place to go, theoptionsinsider.com/pro. Then we're back again next Monday. I'll be back in the Chi-Town studio for another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.